Hi students, 12th Standard Accountancy, Chapter 5, Admission of a Partner, Exercise sum number 18. Let's read the question. Aparna and Priya are partners who shares profit and losses in the ratio of 3:2. Brinda joins the firm for 1/5 share of profit and brings in cash for her share of goodwill of rupees 10,000 rupees. Pause necessary journal entries for adjusting goodwill on the assumption that the fluctuating capital method is followed, and the partners withdrawn the entire amount of their share of goodwill. What they tells us, let's understand the question. Aparna and Priya are old partners whose old profit sharing ratio is 3:2. Brinda is a new partner joined to the firm in the ratio of profit sharing ratio, whose profit sharing ratio is 1/5. Brinda brings cash for share of goodwill at the 10,000 rupees. What we have to do? We are going to pass the necessary journal entry for the goodwill. Okay. And also the partners withdraw the entire amount of their share of goodwill. So we are going to pass the two journal entries. First one for bring the cash. New partners bring the cash for goodwill. Okay. And second one for the old partners withdraw the cash entirely, cash amount entirely as a share of goodwill. We are going to pass the two necessary journal entries what they asked in the question. Okay. Listen. The first journal entry is Brinda is a new partner who brings cash for 10,000 rupees as a goodwill. What is the format for the journal entry? Cash comes into the business. So cash account is the receiver. So debit the receiver. So cash account or bank account data 10,000 rupees to respective old partners capital account. So respective old partners capital account is to be credited. Who are the respective old partners? Aparna and Priya. Okay. So Aparna and Priya's capital account is to be credited. How can we distribute the goodwill amount 10,000 rupees? In the sacrificing ratio. Sacrificing ratio is not mentioned in the question. How can you calculate the goodwill? We are taking the old profit share ratio as the sacrificing ratio. What is the old profit sharing ratio? 3:2. So 3:2 we are going to assume as the sacrificing ratio. So 3 for Aparna and 2 for Priya. The sum of the ratio 5 is you are going to enter into the denominator. First we are going to calculate 10,000 rupees for Aparna's capital account. So 1/5 is 5, 2 5s are 10, 30 is to be added here. 2,000 into 3 are 3,000 rupees. Share of goodwill goes to Aparna's capital account, and let's take Priya's capital account. 10,000 rupees goodwill for 2/5 means 1/5 is 5, 2 5s are 10, 30 is to be added here. 2,000 into 2s are 4,000 rupees goes to Priya's capital account. So this is first journal entry only related to new partners bring the cash 10,000 rupees for goodwill. The journal entry is bank account data to old partners capital account, respective old partners capital account. What is the second journal entry? The old partners withdraw the entire amount of goodwill. Underline entire amount of their share of goodwill. So the old partners withdraw the entire amount of share of goodwill. What is the journal entry? In reverse order. Old partners capital account data to respective old partners capital account data to bank account. Who are the respective old partners? Aparna and Priya. So we are going to pass Aparna's capital account data 6,000 rupees and Priya's capital account data 4,000 rupees debited to bank account 10,000 rupees credited. Okay. This is the journal entry. Do you have any doubt? Please comment it in the comment box. Thank you.